Hello, everybody, and welcome to this special webinar that we're doing for Coinbase investors and any investor that is experiencing an exit event on Bank to the Future. So we wanted to give you the opportunity to get your questions answered. And we put a group of people that are all experiencing and going through the Coinbase exit and invited you to ask your questions and for us to share in detail the process for reaching an exit event on Bank to the Future. In order to make that happen, we've got Adam Vaziri here from Bank to the Future, and we've also got Gunnar here, who's the COO, I believe. Are you COO, Gunnar, or First Digital Trust?
Correct. Yeah.
Excellent. And we're going to go through a bit of a background, help you understand what an exit event is, and then we're going to answer as many questions as we can on the process that we've put together in order for you to get delivery of your shares and decide what you want to do next. So the first thing is that at Bank to the Future, because we started such a long time ago, we've been over a decade with the world's first crypto securities business. And we're the longest standing company in Bitcoin. And we started supporting through our investor community, investing in private equity of these very strange companies that even venture capitalists didn't have the vision to invest into in the early days. But now our industry has become so large. And really, when you're investing in private equity, you're investing for a 7 to 10 year cycle to have ultra high returns at a very high risk. And we started getting a flurry when we were about, many of our early funding rounds, they really started to kick in around 2015, 2016. And when we hit 2021, we started to get a flurry of these just companies that were becoming these ginormous multi-billion-dollar unicorns, going public, issuing security tokens, being valued at multi-billion dollars and all sorts of stuff. And our industry really came through. And because we were investing and you were investing very early, we started to see that cycle now. And so we expect a continual cycle from here of companies either failing and going through some kind of liquidation proceeding, or becoming bigger and remaining private, or actually reaching those exit events. And one of those companies is obviously Coinbase. And so to give you an idea of some of the things that we've experienced recently, we've had, for example, Bitstamp was acquired by a private company, and that meant that everybody was forced into cashing out their shares. And that was due to the terms that were in the investment agreement that meant that if the majority shareholders decided that they wanted to sell, then the minority shareholders, i.e. our group of investors, would be dragged along into that deal. And there's tag along as well on there where we have to get the same terms. They can't sell us out at worse terms or anything like that. Other things that we've experienced is a company that they had good cash reserves, but they decided that rather than burning all that cash, they'd actually buy back all the shareholders. So recently we had Scenario, who exited all their investors. They decided that they weren't going to continue the business, but rather than waiting until they ran out of cash, they paid out a Bitcoin dividend, which produced returns greater than everyone invested. And then they decided to buy back all the shares and close the company. A company that has been very, very successful is obviously Coinbase, now one of the highest valued companies in our industry, and now is a public company, is no longer a private company and is a public company. And we were preparing for this for a long time. We had all of our processes drawn out, but we were waiting for that first case before we could actually test the robustness of our processes. And it's when we put the processes to the test with trying to deliver the Coinbase shares, we discovered this myriad of middle people that were getting in the way of just us being able to deliver the shares now that the private company. And so we want to go through some of the details there so you understand, because some of you might be experiencing taxable events or accounting. We're not tax advisors, we're not legal advisors, but we want to at least give you an understanding and appreciation of the nature of the transaction and what happens here, and then the innovative solution that we put together with First Digital Trust so that you can get access to your shares, sell them, or do with figure out what you can do with those next. There are also other events. For example, Exodus is one of the companies. They went public, but via a security token rather than a full public offering on a national exchange. They started trading on T0, and there was an optional thing. So with Coinbase, there's an exit that has to happen. Coinbase tells us they're going public. And so that's an exit event. With Exodus, there was the option of exchanging shares for tradable shares. So we've now had a lot of experience, and we've put together a lot of these processes. So we wanted to make sure that you had a good understanding of the nature of the transaction, and then just simply answer your questions in this special webinar with a group of small people all experiencing the exit event with Coinbase. So rewinding slightly, as I said, we had a myriad of middle people. There's brokers, there's transfer agents, there's brokers of brokers, there's brokers of brokers of brokers. And each and every one of them has a compliance team. And in the compliance team, they have a policy of what type of business they like to take on. And when you have what they deem to be a higher risk transaction, i.e., there's maybe a custodian in the middle, or there's a Cayman Island entity in the middle, then they see it as higher risk. It doesn't mean it is high risk. It means that they have to invest considerably more resources in understanding the nature of the transaction and who's behind it. And every time we progressed with a traditional broker, the compliance team just thought, well, we don't want to deliver shares to these hundreds of investors. There's no real business sense for it for us, and there's a lot of work to be done. And so one by one, although they were more than happy to do it, the compliance team started blocking the transaction. So for all the preparation that we did, we couldn't get past these bottlenecks. And all of our investors are used to digital assets. They're used to a world where you hand over your wallet address. And some of our investors have never invested in the traditional market, so haven't even opened their first brokerage account. They went straight into, investing in tokens and cryptocurrencies, and have not actually experienced some of the myriad of complexities that happen due to many of these regulations and laws that are set up that often block things which seem so easy as just transferring a wallet address and go. So I think the first thing we wanted to do is I'll bring in Adam at this stage, I think, to maybe just give an overview of the nature of the transaction. So it may seem very simple. Many of you may think, I've got these shares that I invested in and I just want those to be tradable on the stock market. But there's a little bit more detail in there, because whenever you invest through BnkToTheFuture, the only reason it's possible for a company to take on lots of investors without actually having to be a public company too early is because we put a structure in the middle. And then that structure means that you end up with one form of shares and we have to settle with another form of shares. And then we started explaining weird terms like payment in kind and various other things. And so a lot of these are accounting and legal complexities. But maybe Adam, you could help give our investors just an overview of what happened when they originally made their first investment, what led to the exit event, and then what actually is happening when you go from this private Cayman Island SPV to these publicly tradable shares. And then we'll bring Gunnar in as well, where we can go through the first digital trust solution.
Yeah, sure. So the first thing is for every pitch that is on the platform, a segregated portfolio is created, and a segregated portfolio is, in broad terms, a special purpose vehicle. That entity will only hold one asset, and that's the asset that the company, we call it investee entity, is selling. So let's say that's a pitch and that occurs, and you are not investing directly in the shares of the investee entity. You are investing in shares in the segregated portfolio. And that segregated portfolio is holding the shares of the investee entity. So you subscribe for shares in segregated portfolio. At the end of the pitch, the segregated portfolio now has the funds. It enters into a contract with the investee entity to buy, for example, shares or other investee securities. And then now the only asset of the segregated portfolio is holding those shares. So when you look at your share certificate in Bank to the Future, what you have shares in is a segregated portfolio. Now, this is true from the start of the process, and it is true right through to the end of the process, so the full life cycle of the investment. So at every junction, you may have noticed, occasionally we receive from an investee entity a request to make a decision. The segregated portfolio would have signed a shareholders agreement. It would have been disclosed on the pitch documents as part of the financing documents, which you would have seen. Those rights have to be enforced. And so therefore, from time to time, they'll come to us and ask for a decision to be made. And so we pass through those decisions to you to be made as a shareholder of the segregated portfolio company. The reason we're passing through those decisions is because we are essentially emulating, trying to replicate you having the actual real share itself. So we are not making any decisions for you. We are not exerting any discretion around those decisions. We simply receive a decision, oh, can you vote on this matter about, doing a new funding round or whatever? We take that decision and we bring it to you for you to decide upon. And if you would have seen the Articles of Association, you'd have seen that we have a set procedure around how we deal with these corporate actions. Now, that's for the life cycle of the company. But when you near to the end of that investment horizon, and we are talking about corporate actions that may eventually lead to what we call an exit event. And an exit event, in this case, we're talking about Coinbase is an IPO, and it is really, if you went the end of the road in relation to the investment in the segregated portfolio. So we do not need to continue to emulate the underlying investment for you. In fact, what we intend to do is give you the physical investment, and in return, you exit your shares in the segregated portfolio. So your shares in the segregated portfolio cancelled, and you receive physical delivery of the underlying security. That's in principle, but in practice, we have to look at the logistics of being able to deliver that security to you. And those logistics, when you look at it in practical terms, we have to factor in things like fractional shares, which in relation to a public security, you cannot sell fractional shares. We have to deal with these practicalities. But the main principle is the delivery of the underlying asset to you, or the value of the underlying asset to you in relation to an exit event. And so when we talk about an exit event, we are talking about if you went the end of the road. It's not to be confused with corporate actions whereby you're making decisions as we go. We're talking about really the end of the life cycle of the original investment. And so, I won't talk too much about the FDT solution, but when we are conceiving of these solutions, it is in view of you having made that original investment, followed that investment to fruition, and the fruition is essentially cancellation of your shares in the segregated portfolio and the receipt, physical delivery of the underlying or the value attached to the underlying. That's in effect when we talk about an exit event. There are other forms of exits, but that's the main one that's relevant for this particular situation.
Great. So we're then going to segue into Gunnar's part of this. So the background for this is full disclosure. Firstly, I am as an individual, I am also an investor in Coinbase, so I'm looking out for my interest in how this happened. Bank to the Future itself is also a shareholder in Coinbase via the SPV. And we are also shareholders via a funding round that happened on the platform with First Digital Trust. Now, when we first started working with First Digital Trust, we've been doing about 2 years of R&D into an optimized structure for allowing people to invest in private equity, receiving yield, and buying cryptocurrencies in a retirement plan, and just being able to get complete clarity on the tax situation and a few optimizations and asset protections. And we were working for 2 years on this project. It's called the Retirement Plan B Portfolio Builder. But it dawned upon us that there was an optimization because we've already integrated with First Digital Trust when people are holding funds on Bank to the Future to make investments. They are held in custody with First Digital Trust. We structure as the additional optimizations with legal segregation of assets and also being held on trust, which is a different level of duty and care than if we just simply deposit funds in a bank without a trust structure in the middle. The solution that we wanted to come up with First Digital Trust is, firstly, can we get you these shares? So take receipt of those shares. And obviously, because First Digital Trust had spent 2 years with us and their compliance team and their lawyers and negotiating contracts and all sorts of stuff, they were already very comfortable that we were complying with everything we needed to comply with in order to make this happen. So that was really a ginormous leap that made it happen. The second thing we wanted to achieve is, well, rich and wealthy people have custody accounts. They're expensive to set up. There's big setup fees. And there's all sorts of things that people, have these custody accounts and trust accounts set up for asset protection and optimization. Could we create one for all of our investors that are receiving public shares without all the restrictive and very expensive setup costs? And First Digital Trust figured out a way, that involved us covering some of the cost, but then also waiving it for all of the clients and customers as well. The next thing we wanted to do is, could we take advantage of the Bank to the Future integration to offer possibilities that would just simply not be possible with any broker? So if you went to a traditional broker and you were holding your shares there, let's say you wanted to sell those shares and you wanted to receive dollars. Well, because we've already got an integration with First Digital Trust, it would be possible for you to give an order to sell. First Digital Trust it's not got the whole brokerage service where you can log in online and buy and sell. They're not set up to do that. But you can, execute an order, decide that you want to sell, and then you could decide that to settle those funds, either keep them in custody with First Digital Trust, or you could withdraw them to your bank account, or you could even put them back onto your Bank to the Future account. And when they come back into your Bank to the Future account, you can do everything that you can do on Bank to the Future. You can buy some Bitcoin, you can withdraw it as a stable coin. And so try doing that through a traditional broker and you'd have a very, very complex task here. So not only did we want to give you a solution, we wanted to give an optimization as well. So then you can reinvest it in other deals or put it into Bitcoin or do with it as you choose. And so that's really the solution that we came up with First Digital Trust. And the first step of that was we've shared with First Digital Trust the basic details of our investors and how many shares they're entitled to. And First Digital Trust now has delivery and hold those shares under our segregated portfolio, which is Bank to the Future Coinbase SP. And now has set up individual accounts ready for you so that you can reply to their email, complete their form, and then you can log into your own custody account. It's just set up just for this, but if you want to explore further services with First Digital Trust, then that would be a separate arrangement, but the account could be used. Or you could settle back to your account at Bank to the Future. So now let's bring Gunnar in. And so Gunnar, maybe you could just give a bit of a background on why this was possible with you, but not other brokers. And some of the things that investors might need to be aware of when they're onboarding and trying to claim their Coinbase shares.
All right. Thanks, Simon. And Happy to share more about that. So I think the first thing that I would like to highlight here is that trust companies are really perfectly set up for this. We are essentially financial intermediaries, and when we were building up First Digital and throughout our sort of a life cycle, we've established relationships with all different types of other financial service providers. That means banks, that means broker dealers, that means transfer agents, clearing houses, all types of intermediaries. And that's what trust companies normally do. We're not in a spotlight, but we tend to provide a lot of settlement clearing services to institutional providers. But there's nothing really stopping us from providing these to also retail individuals. It's more about our focus. Our main focus is to provide trustee and fiduciary services, but custody and settlement is a huge part of that, and we usually do that behind the scenes. And also, other reasons. First Digital is fully licensed. We're regulated as a trustee. We are under a fiduciary duty to always deliver and always to honor our client instructions and keep our clients' best interest in mind. So there is really no other entity better placed to handle this kind of situation than a trust company. When you're dealing with a broker dealer, broker dealer is your counterparty there. It's their incentive. In many cases, they're also on the other side of the table, right? When you're selling shares and they might actually be the counterparty that you are selling it to. So for us to be in the middle here, we can carry out a number of functions. First of all, as Simon mentioned, we can take possession and we can hold the shares for the ultimate beneficial owners. We can carry out the instructions of the ultimate beneficial owners. The only thing is that we need to establish a formal relationship, which is the process that we're going through right now. And it also gives you more flexibility. What Adam was mentioning, this is actually an exit event. But what we realized also, and what Bank to the Future has communicated to us, is that in this mix of people that are the UBOs of these shares, there might be different preferences. Some of you might want to hold on to the shares for a longer period of time, depending on your own assessment of how Coinbase is going to do. Some of you might want to exit right away. We know some of you wanted to transfer it to a broker, but that seems to be extremely complicated with all the different intermediaries in the middle. So by establishing a custody account and taking those shares into the custody account, it will actually give you more flexibility. And you can basically give us instructions in terms of what your objectives are. If you want to hold on, that's fine. If you want to sell, that's fine as well. Normally for the First Digital, our main focus, we actually deal with B2B clients, for example, like Bank to the Future here. But I think this is also a good exercise, and we sort of negotiated a package or a deal where all of you can actually get access to individual accounts with a proper bona fide custodian trustee. If you want, you can use these accounts for other purposes as well. We won't be looking at that right away, but there is an option for that as well. So I think the key word here is flexibility. The only thing that's a little bit difficult is transferring, well, it's quite difficult actually, is transferring the shares to your own broker. As was mentioned earlier during this call, there's just too many layers in between, and each of those intermediaries, they would want to do a full due diligence and all that. But we can definitely help you if you want to hold on, if you want to sell, whatever your preferences are. We can make it happen. Also, like I said, it's a unique chance. Normally, our main business is not individual accounts, but we made this available. So this is sort of, I wouldn't say a limited time thing, but we've given a very, very preferential treatment for all the Coinbase UBOs or shareholders in this case. So it's a good chance to take advantage of this, and we've tried really to reduce any entry barriers and any kind of issues that you might have to deal with when dealing with your own brokers, when dealing with transferring shares around, and also help you guys continue the relationship with the Bank to the Future and stay within the ecosystem. I think these were the main goals, and I think with this proposed structure, we really achieved that. So I guess this is a high level one. We can go into specific questions, but maybe I'll pass the torch back to Simon or Adam to maybe if you guys want to explain a little bit more on your side.
Yeah, also the account. So already we've had announcements that Circle is doing a SPAC where they're going to be acquired into a public company. We've had Robinhood that has already gone public, but we're in the lock-in period. Kraken has mentioned that they're planning on going public over the next 2 years, and so is Ripple Labs after they get through the SEC challenges they're experiencing right now. So this account can be reused as long as we have this relationship, and I see our relationship continuing, given that we're doing retirement plans together, which is a very long-term relationship. So it can be reused for anything there. So unless Adam wants to cover anything, I think this is a good time to actually just jump into questions. So we've got the Slido board. Azad is here as well. He can pull up the Slido board. There's no account needed. Just scan that QR code, and you can upvote other people's questions or ask your own questions. And we're all here to get those questions answered for you. I think, what is it, Azad? If you type in Coinbase Live?
Yeah, it's Coinbase Live. So you go to Slido.com and just enter in the search field Coinbase Live.
I think it's sli.do rather than slido.com.
Either work.
Oh, both work. Great. Okay. So let's take the first question then.
Okay, first question is, how could I transfer my shares to my own brokerage? My brokerage is First Trade. Why do I need to transfer my shares to FDT first?
So I think we've covered that one. The answer is because the brokerage declined the transaction and they won't take receipt of shares. All the brokers that we tried it with, they said they would do it at first, but then when it got to the compliance side, they decided that it's just not something within what they want to do. They were okay if it was already in your name, and they wanted to receive it from one brokerage account in your name to another brokerage account in your name. But because the shares are not held in your name, the just for all the anti-money laundering laws and rules and regulations and risk monitoring, we just couldn't get the brokers to do it, no matter how hard we tried.
And maybe just another thing to add from my side here on the last bit of the question is that the shares are actually already with First Digital. We've already taken possession of those. So all you're doing is essentially claiming those shares. There is no transfer involved. So that's what makes it possible.
Okay, second question is, will we keep a dormant account with FDT if position is sold for future deposits?
That's one for Gunnar.
Yeah, so I can take this one as well. So this is the first time we've set up such an arrangement. I think we'll leave it as an open thing, but overall, I think if the share distribution works out well and if everybody is happy, we have no issues maintaining the account. There's no maintenance fees or anything like that. And I'm sure some of you might have invested into these other segregated portfolio projects that were mentioned before. So there might be a chance that you will get a delivery of another shares in another company, something like that. So we can keep it open. We don't have any intention to change any fees or to charge a dormant account fee, so the account can remain open and it's available for future use. Right now, our main goal is really to get the Coinbase share thing executed. And as I said, in the future, there's also other ways. Our company also provides a huge variety of other services that you guys might want to explore. So yes, the account will stay open. There will not be any dormant account fees or anything like that. And on a case-by-case basis, we will work it out with BnkToTheFuture if you happen to be also the beneficiary of any other share distributions.
Okay, are there special requirements for the account opening at FDT? Will all Bank to the Future customers be able to open an account?
So right now, we've only made this available to the select few investors in the Coinbase project. We don't have any broader plans to open it up for a wider audience. As I said, our main focus as a company is really B2B. We service other companies, fintechs, and businesses like that. We are legally able to take on individual clients, but we don't have a plan to open it for the broader audience right now. Again, it all depends on how this relationship evolves, and if there's other opportunities, there might be a business case there, but it's too early to discuss these things, I would say, at the time being.
Yeah, I think it's worth saying the FTT's onboarding process isn't about compliance with securities laws. It's mainly around AML and trust laws. And I know that's a bit geeky, but we have to adhere to a lot of securities laws in that arrangement. But holding your shares in custody means that you don't necessarily have to have met the requirement of investing in a company. So it's a slightly lower bar in terms of many of those requirements. It's mainly centered around AML and stuff. And because we're very familiar with each other's compliance manuals and policies and procedures so far, we haven't had an account that could be onboarded to Bank to the Future but couldn't be onboarded to First Digital Trust yet, because we've already put it through our process as well. That doesn't mean that it's guaranteed. There may be some kind of special scenario that like that, but we haven't encountered that challenge yet.
Yeah, and I mean, in general, there is no special requirements. I think you should expect the standard onboarding. We try to make it as painless as possible, but we do need you guys to fill in our standard onboarding forms. There is some bit of KYC that we need to refresh and ask you to submit directly to us. For various data privacy laws, we have to just collect it directly. But there is really nothing special in that that account opening process. It's no different than opening a bank account or a brokerage account or something like that.
Yeah, and you should have all received an email from First Digital Trust already. So if they haven't received that, Gunnar, what's the process for? Is it reaching out?
Yeah, that's a good point to highlight. So maybe I'll just reiterate that. If you're the beneficiary of the, or if you believe you're the beneficiary of the Coinbase shares, if for some reason you didn't get the email, maybe it went to the junk mail, reach out to us. So there's two emails that you can contact us at. One of them is cs@firstdigital.com, and the First Digital is spelled with number 1, as in 1ST. digital.com, and the other email is onboarding@firstdigital.com. And same thing, just I want to highlight that how the spelling is for First Digital. You can reach out to us, and it will create a ticket in our system. Somebody will get back to you. Our staff, our onboarding staff, has been briefed on this special project, and we have also prioritized this in front of all the other applications that we have with onboarding. So it should be quite quite seamless and quite easy process to go through, and it's only a one-time thing. Once you set up the account, you don't have to do this again.
Okay, will we receive a statement when we sell the shares with FDT for tax purposes?
Yes. So in this case, once you onboard with us, you will actually get a full login to your account. So just like you would get from your bank or a broker, you can sign in. You will be able to see your share balances. You will be able to see the market value, and if there is a sale of shares, you would be able to have that that statement or a record of that transaction there in your account. So that would be essentially a reduction in the inventory or quantity of shares that we are holding in custody for you. and there will be an increment in your US dollar balance, as the US dollar is the default currency.
Can I also use the same account with FDT Trust for retirement plan B?
It's a little bit different. So for now, what we have done for this account is it's restricted for Coinbase shares, and we might have future plans, like I said, for auto distribution, things like that. But retirement plan B is a little bit different structure when we're talking about, from the legal point of view, and maybe Adam and Simon can share more about that. But it's a little bit different, so it has to follow the predefined process for retirement plan B right now, I would say.
Yeah, the important part here, and Adam can give a comment, but with retirement plan B and with you as an individual, it's very important. Part of the structure is to ensure, in order to achieve the maximum asset protection structure, is that you make a clear separation between shares that you own and shares that your retirement plan and segregated portfolio owns, because we can't give you tax advice or legal advice, but those will be treated very differently for tax purposes and legal purposes. So the idea behind retirement plan B is to make a very clear distinction between assets that the retirement plan owns and versus assets that you own as an individual. And so you wouldn't really want to mix these two things. Now, I know the user experience is not great because we'd like to have everything in one seamless place. But when it comes to you doing your tax reporting and your accounting, having those very clear lines of distinction between a corporate entity or a segregated portfolio owning something versus you owning something becomes very important. And if anyone's gone through the retirement plan B online coaching program with all the tax advisors and legal advisors, you'll understand the importance of that in achieving your inheritance goals and all the other goals that we've set out. Maybe you want to comment on that one, Adam?
Yeah, the retirement plan B is a segregated portfolio. We talked about that just briefly before. And when you subscribe when you make effectively an investment into your segregated portfolio, you are subscribing for shares in it. And so there is a separation, as described, between retirement plan B segregated portfolios and yourself. You're always a shareholder in the segregated portfolio, and that segregated portfolio really has one action. One is for you to subscribe, and the other action is for you to withdraw. So then it's a very limited purpose structure with a very defined purpose. The other point is just to be clear about understanding, going back to what I was saying earlier about physical delivery. At the point of exit, when we talked about physical delivery of the underlying security, I mentioned earlier, there are certain practicalities involved in being able to deliver that to you. It's important to note that in this situation, the shares, this is somewhat more technical, but the shares, as they are in an electronic form, they are not certificated. And so therefore they have to be held by a custodian. And so the result of that is that you have beneficial title. Well, as long as you follow this process of opening your account with FDT, you'll have beneficial title to those shares. Because although we attempted to do it, the legal transfer of the title was not possible, as described by Simon through those brokers, etc. And so it's a really important point here. Because of its nature being an electronic share, it has to be held by a custodian. So we're in a position that the custodian can receive the shares, and now the custodian is in a position to deliver to you the beneficial title in the share. And there's some details that we need to talk more about as well surrounding this. But I just want to make that clear what's being delivered.
I think another point worth covering, I remember in the forum, people were asking, they were saying things like, well, I don't want to sell, I don't want to create a taxable event. Now, while we can't give you tax advice, we can give you an understanding to discuss with your tax advisor about that. So some people were thinking that there is a continuation here, and therefore it's not a taxable event. And so, but what is the actual arrangement here? They had shares in this one private company, and now they have shares in this publicly tradable company. Without giving tax advice, what do you think they would need to know to discuss with their tax advisors there? Has there been a taxable event?
It's important to note that, as explained in the beginning, it's not a regular corporate action. And as I mentioned before, it's kind of the end of the road in terms of the relationship directly with the segregated portfolio, because at the end of this process, your shares in the segregated portfolio will be cancelled amongst everyone else's shares in the segregated portfolio. And at the end of that, there will be no more shares in the segregated portfolio, and you will receive delivery of the beneficial title to the electronic shares, which are held by the custodian. So from a tax point of view, of course, it depends on your jurisdiction and other matters and how these events are described. But certainly, it's not the case that your shares in the segregated portfolio are being transferred to FDT and that those shares are again being delivered. That's not the case. It is the underlying security that's being delivered to you. The actual legal ownership, no. The beneficial title, yes. And it's through the custody arrangement. So I would say, probably if you're concerned about whether it is a taxable event, what you want to describe to your tax advisor is the fact that to the shares in the segregated portfolio that you invested in, that they are to be cancelled and that you will receive beneficial title to the electronic shares, the Coinbase shares on trade on NASDAQ. Pro rata.
Okay. And someone was asking about this word in kind. Are they being paid in kind? Is that what's happening here? And what does that mean?
Well, in kind and in cash, it's just really, if you look at our terms in respect of IPOs and how we treat that situation, in that situation, under normal circumstances, you would be paid in cash, i.e., that the SPC, the segregated portfolio, would sell the shares on the stock market and receive cash and then distribute the cash pro rata to the shareholders in the segregated portfolio. We have the option to offer that to you in cash or in kind, and it really depends on the practicalities of being able to deliver that to you, because in principle, we'd like to give optionality, but it depends on practically speaking what can be done. Now, we're delivering in kind, i.e., we are delivering the underlying security to you. Our intention initially was to deliver the legal ownership of the underlying security to you, but it was not feasible. And so practically speaking, the next best option is to give you the beneficial title, but that may not be, that is in kind. So you're receiving that physically. But then it may not be entirely the case, because as mentioned earlier, there are questions around fractional ownership, which fractional ownership doesn't really exist in the context of a public security and trading public securities. So we have to take that into account as well. So it might be in relation to those details that we'll be able to describe to you a mechanism for dealing with that as well. But the lion's share, the majority, is being delivered to you physically in terms of a beneficial title to the underlying security.
Yeah, I think the big thing that we've got out of this is more of a conviction around the vast improvements that digital assets has provided to people. When people are coming from the crypto space, they're used to ownership of assets. easily being able to transfer those through ownership of private keys. And also fractional ownership is just a very common thing, to be able to send 0.1263785348829 ETH is something that people and our investors are at least very familiar with. And this world of traditional securities is really the foreign concept to many of our investors, but others would have had lots of experience with these things as well. So on the fractional shares part, that was the next topic really. And what we'll be doing with the fractional shares is once everyone's onboarded, and we'll make an announcement, then we're going to have to just pull up all those fractional shares, place a sell order. So just divvy them all up. Each of you will have some fractional shares. When you log into your First Digital Trust account after you've completed onboarding, you'll have your full shares. And the fractional shares, we're going to have to execute one sell order. And then we can deliver those funds to your Bank to the Future account so that you can top them up, trade them in for something, because we've already got the integration with First Digital Trust to be able to do that in a more seamless way. But in this case, we're not talking about a large sum of money, but there is those fractional shares left over where there is no actual way of treating that differently. Azad, back to the questions, I think.
How many shares can we expect to receive? The same amount previously mentioned?
So the shares are, firstly, no fees have been deducted. So you can log into your BnkToTheFuture.com account, go to the portfolio section, and you'll see how many shares you hold there. And you will receive, rounded down to the nearest whole number, that many shares once we've deducted our 5% exit fee. So Bank to the Future, just as a reminder, we have our business model is not a traditional managed fund. A traditional managed fund would do what's called a 2 and 20, which is where you pay 2% every single year for them managing the fund, and 20% of any profits. We don't do that model. As Adam mentioned, we don't take discretion. We hold on a pass-through basis, which means we can get those costs right down. But our model is that when we distribute funds, if an exit event, then we will be receiving 5% paid in kind. So we'll have be paid in Coinbase shares, so you're not forced to sell some of them. So you will take the amount of shares that you have right now, multiply that by 0.95, and you get 95% of it after our fee, and then round that down to the nearest whole number. And we'll post, I think we posted something already, but we'll post something again on the investor zone for Coinbase so that you can calculate exactly how much you'd expect to see there. I think FDT, maybe Gunnar can comment on this. I think also when you log into the account, it's not going to be live prices. I think it's going to be the end of close price as well. So if the price moves throughout the day, this isn't going to be, your value won't be updated in real time. I think it's just going to be close pricing. Is that correct, Gunnar?
Yeah, so that's correct. That's a very good point to highlight. So for us, at this moment for shares, we can do close of business pricing. We have some plans in the future to maybe get live pricing feeds for our shares as well, depending on how this is going to expand and if we're going to be holding a lot of publicly traded shares. We might get a sort of a more live pricing feed. Yeah, so that's there just for your reference, just the market price that you can see and that you can have a basic overview of what the valuation of those assets would be to you. And another distinction to draw there is the sale price, of course, that's dependent on the market and execution price as well.
And I believe when you send the application form, that also comes with the custody agreement and the full transparent fee schedule, as well as the fees that have been normal setup fees all taken off.
Correct. So our custody, the terms and conditions, just for the sake of disclosure, it's the same for everybody. It's actually the same agreement that's being used for the corporate accounts that we sign. So any other corporate clients, they all sign the same fee schedule. So it's standardized. It's like you're opening a bank account. You have a standard set of terms and conditions, and we don't usually get many comments on that. There's also a fee schedule attached. So that fee schedule has been modified here. We waived all the setup fees and monthly minimum fees and things like that, just to make it very convenient for everybody, and not to put any additional burden in terms of monthly fees and things like that on you guys. So it's all there. We're also happy to answer any questions if you have. Some of you might want to ask a question. What does this point something in agreement mean, or how certain fees are calculated? Our team can respond to those questions as well.
Great. Next question, Azad.
Okay, JR asks, what are the fees associated with custody?
So just really high level, let me take a look here. I can summarize this. We will send a fee schedule as well. So what I can say here is the setup fee has been waived. So normally for individual clients, we charge $2,500 US just to set up an account. And as Simon mentioned, this is usually typically, these types of accounts are used by high net worth individuals, family office beneficiaries, things like that. So we waived all of that. There's no setup fee, just to be clear here. There's no minimum monthly fee. So usually we charge about 200 US minimum monthly fee. So if you don't have any assets, you don't pay any minimum fees. We do have assets under administration fee. So that's a scaling fee. The details of that are in the fee schedule. It would be too much to read out line by line. So pay attention to that. If you decide to keep the shares, that is the monthly fee that would be incurring, the only one. We also have deposit and withdrawal fees and number of other fees listed in the fee schedule that you will probably not be using to do the restrictions on the account, like OTC transaction fees and if there's any crypto trades, any of that. But all of those functionality has been limited for now. So the main one really that you need to be paying attention to is the AUA fee. And again, as I mentioned, we try to be as transparent as possible with this fee schedule. So if you do have any questions, don't hesitate to ask. We can explain, we can elaborate. There's also some explanation already written out to the fee schedule as well.
Okay, what is the reference value per share for tax purpose? Is it the IPO price, meaning that we should declare capital gains from private equity price to IPO price, and then declare another capital gain from IPO price to sold price by FDT?
If anyone wants to comment on this, feel free, but we can't give tax advice. But if you have an accountant or a tax advisor, or you're just even searching in Google, just follow the same process that you would be using when investing in a private company that goes public. I'm sure there's lots of good articles out there, and then you need to check that with your accountant and tax advisor. I don't know if anyone has any experience who want to comment on this.
Yeah, I just wanted to say on this that taxation is always very specifically driven by your country of jurisdiction. And what we've seen here is that there's a huge number of people from a huge variety of different countries. So I really also encourage everybody basically to check the local laws on this one, because it might vary from country to country. It's different in different jurisdictions, different based on your residency, things like that, and different based on your tax residency. If you have dual passports, citizenships, it can get very complicated. So this is something that you do need to do research on, and I really encourage you to do that. We can be a resource here. Like if you need information, if you need statements, I think there was a previous question about that. We can provide that, but we cannot make that determination for you on FTT side. Okay,
probably unlikely, but what would happen if Coinbase distribute dividends? will FDT give pro rata funds to all accounts?
Yes. So in this case, we will, if you decide to hold the shares, so we would do what any other normal custodian would do under our asset servicing services. So if there is any corporate actions, notices, things like that, major things, we would relay that information to you.
Okay, will the same 0.20% withdrawal fee from FDT apply if we withdraw proceeds to our Bank to the Future Fund section rather than to an external bank account? So it's 0.20% withdrawal fee. Sorry.
So when it's to the Bank to the Future, unless it's some sort of external transfer to an external bank account, if that's not the case, if it's an internal transfer to Bank to the Future, there wouldn't be the 0.2 fee, as it's not a withdrawal from our ecosystem. The withdrawal fee is basically when the funds are leaving back to your like bank account or a third party or things like that.
Yep. So that would be because we are already holding our funds in custody, our client funds in custody with First Digital Trust. That's just a ledger update as opposed to an actual movement. And then if then it would be the normal fees at Bank to the Future if you were to withdraw them, trade them, invest them.
Can we place a limit order with FDT?
So we just for the logistics of this, we cannot do limit orders. It would be too much to monitor, and there would be other issues because we are treating this as a sort of a whole lot of shares. So if multiple people have different limit orders, that would be very difficult for us to manage. As I mentioned, or as was mentioned before, we're not really a broker dealer in that sense. The main point of this exercise is to execute the distribution event, give people flexibility, and help people if they want to stay, hold on, they can. If they want to exit, they can exit. But the orders would have to come in terms of a market order. We have some leeway there, I think, but we do want to standardize this as much as possible. So at this time, like limit orders or any types of other maybe more exotic order types are not possible with these.
Can payments be made to any country, any amount, or in crypto?
The way to execute that one is if you ask, you log into your account, you've got your Coinbase shares, you ask FDT to sell them, and then you ask to settle to your Bank to the Future account. We've already onboarded you as an investor, and so therefore, as long as it meets all our requirements, you are then able to trade them to Bitcoin or to withdraw them as a stable coin, or leave them on your account, and you can invest in either any primary deals or the secondary market. So that would be how you would execute that. At Bank to the Future, you can also connect your bank account as well when requesting a withdrawal. And as long as you're not on one of the countries that we can't withdraw to, which is normally sanctioned countries, and if First Digital Trust is similar restrictions to any other financial institution as well as us. But if you've already got an account with Bank to the Future, then you've already been accepted there.
Are we able to use BF identity to register with custody provider rather than having to upload identification details again?
We haven't built an experience where you can take your data that you've given to Bank to the Future and then we can pass that on. That's not something that we've built. Adam's involved in a project that would make all that plug together, block pass in the future. But at the moment, this isn't all plugged together in that sense. So First Digital Trust have their requirement to onboard you, and you need to give permission to First Digital Trust by giving that data directly. We are not authorized at this stage to pass that data on through Bank to the Future identity, and we haven't built a technical integration that would allow that to happen at this stage.
Yeah, and I think just on our side here, so this might seem a very simple thing on a surface, but there is also a lot of legal details, sharing of personal data. And going back, why we're asking you guys to onboard with us directly as well is because of some of the limitations that are there when it comes to sharing people's personal details. We want to, on our side, we want to make sure that we can comply with our requirements, that we've actually collected it from the people. And then in the future, we've been in discussion with Bank to the Future and with Adam and the rest of the team to maybe make something like this possible. But there's a lot of different nuances. Again, there people are from different regions. In Europe, you have the GDPR. In different countries, we have our requirements. Bank to the Future has its requirements. So it's actually quite complicated area.
Yeah, and hopefully in the future, both First Digital Trust and Bank to the Future identity will be integrated with BlockPass as well, which is really working on that mission of shareable KYC.
Okay, we got 3 more questions. You guys happy to take them on?
Wow,
Yes.
We've done an hour already. I thought this was going to be a quick one. Let's do the final 3.
All right. So another question from JR. Will we be able to liquidate shares and transfer the funds directly to our Bank to the Future wallet?
Not Bank to the Future wallet, but the fund section on Bank to the Future account. Maybe that's what you meant, but just so if you're clear, Bank to the Future wallet is not a product we're supporting anymore. But you can to your BnkToTheFuture.com account and available in the fund section.
Can we sell our shares on FDT?
The short answer is yes, but I do want to elaborate on that. Basically, as mentioned, we are not a broker dealer, so we don't have your typical like trading dashboard where you go in and you put in an order and all of that. But you can always give us instructions. So we will circulate a standard format of instructions that you can send to our CS, and we will execute that. We will basically sell those shares on a market, and the proceeds would be credited to your account. So if this is something that becomes more popular, we will look on our side, technology side, how we can make it more easier. But because First Digital was really built for institutions and bigger block sales and transactions like that, we don't have that functionality in a client portal. So we executed it in a more manual manner. But yes, that's the whole idea: selling versus keeping the shares. These are the main 2 demands that we got, and I think this satisfies both of the groups.
Okay, and final question is, can we move our shares from FDT to other brokerages?
Highly unlikely. Again, this is something that we looked at. We've actually tried to execute some of the test transactions, and where usually the process breaks down is conceptually both sides they say yes, we can take in we can take in transfers, and we can, and our platform as well allow us to actually make external transfers. But where the process breaks down is when we have a third party involved, and either our side or the receiving party side, and especially on the receiving party side, because again, there might be, let's say within this mix, there might be hundreds of different brokers. They all have different process, they all have different rules. And that's why, for the sake of everybody, we've decided to basically drop this flow, because it's impossible to predict. And in many cases, it's going to be impossible to draw to a successful sort of end, basically, this transfer process. Because of the AML, KYC requirements, not only for us, we can supply what we have on this, but also the other side of the broker might ask something different. And then you might have somebody that's in the UK, it's maybe in US, maybe somebody that's in Argentina or something like that. And it's something that we cannot standardize. And when we cannot standardize things, it's very hard for us to deliver any kind of SLA or any kind of a process where we would be confident, really saying, yes, everybody should do this, or we should do this. And the other thing that we got from our brokers and from the other side is, again, we're in a grand scale of things, we're dealing actually with quite small amounts of shares and quite small amounts. So on our side, because we're more institutional focused as well, our brokers are not too happy about going through with this whole motion about maybe a smaller amount of shares than they're usually used to. So these are the challenges. And at this point, we would really, I don't feel confident saying that, yes, we can deliver on that. That might change in the future, but I think at this point, it's something that like I said, I don't feel making a promise on that.
Okay, looks like that's all the questions. So firstly, thanks to Adam staying up in Hong Kong. It's incredibly anti-social hours for him. Gunner's been traveling around, so he's normally in Hong Kong, but he didn't have to do the crazy hours that Adam's doing, but Adam's the soldier. So thanks everybody for joining us. And thanks for all the great questions. I didn't realize that we could cover an hour on this topic, but I hope it was insightful and gave you lots of food for thought. We look forward to delivering this solution for you. If you haven't received the email from First Digital Trust already, check your spam, check your junk. If it's still not there, then Gunnar gave the details. It's onboarding at first with a one st digital.com. Then they'll be there to help you as well. We'll see you all in the next episode. Thanks, everybody.